Incredibly challenging day today. We are down 1,200 per micro. We had 4 losing days in a row. It looked like we were going to turn it around several times, and then the market kept reversing against us until we were down. So very frustrating. Tried to increase position sizing and phase into the E-minis on the 200K. So instead of a 2x loss, we had a 3x loss on the 200K versus the 50K. And so we were close to that drawdown point. And let's look at where we are on the drawdown. Let's look at the market first and look at the drawdown calculator. We had this market very choppy overnight, and then the high here, and then this divergent price action made another high. We were long, we rolled over, got short, looked good on the short side. Up on the day, the market reversed. We were able to be nimble enough to reverse and be back up on the day near this point. Like the market would have a full reversal, then rolled over again and just chopped down here. So just doing everything it can. The market's just so price action just is such a stop running predatory type of price action that feels like it's against you. You can't be paranoid. You always gotta find a way to trade or not trade. And we're trading small or not at all right now. And so we may reduce down to 0 contracts after my weekend research. This is just most extreme price action I've seen. Very frustrating to trade this and to see this type of price action. Every time you get in a position, it starts to go your way. The market reverses, and typically, the more advanced our strategies are, the more the market seems to reverse. And so it just morphs, it continues to morph and has more turning points than I've ever seen. So let's take a look at the trades on the day and some more indicators. But first, the drawdown curve. So we're down, coming in today, we're down about 2,800 per micro or 28,000 per E-mini. And the worst case drawdown since July of 2016 was right around 38, 39K. We would be at 40K right now. 40K, and then at this point is 50K. So even if you do continue trading, you have about 1K per micro or about 10K per E-mini till this worst case drawdown. And so we're mainly focused on the relevancy of the data from this point forward because of the index values. And we are still, this portfolio, we started trading it on February the 4th, and it's going to end up being down about 20K on the month after today. These are the results through the 17th. This is what I'm going to get ready to update on the 18th. But these are the results through the 17th. It's going to be down 20K on the month. So it'll still be up 18K on the year. But this type of market action in February is just more extreme than just about anything I've ever seen. I have some strategies I'm developing or working on. For example, this falling knife scenario. You're not supposed to be able to catch these falling knives, but this is the kind of market environment that the dip buyers, too much liquidity from the Fed. They continue to think that this is just a normal pullback in a normal bull market, even though Fed policy is what drove the market up. And if in reality, the Fed is still continuing to print money, and the interest rates are still 0. So it's one of the reasons why we're seeing this. The discussion in the minutes in the Fed speak is more hawkish, but the actual action is still very dovish. And so we're seeing this. We've already seen a decent-sized pullback in the market, but it's the choppiest bear market I've ever seen. If it ends up being a complete bear market, most of the time we talk about bull markets are slow and bear markets are fast. This has got to be the slowest forming bear market I've ever seen, and that speaks to mean reversion of price action. Price action sometimes changes. The market says, well, it's not a bear market because it's not falling fast, but it could be a stealth bear market. Maybe the first bear market that we see that moves this slowly. What does the zigzag indicator say? 20 times the market reversed 1/3 of 1%, and it's just hard to trade. It's hard to even look at this and think that there's a way to trade this. You have to pick those turning points, and the things that happen around those turning points aren't mutually exclusive to other points that aren't good turning points. And so the CVIX indicator is 0.72, so that would indicate that you could trade since it's less than 1. But the VIX The market's down less than 1% on the NASDAQ. So let's look at the trades on the day. Here is the micro E-mini S&P tick pullback. Nice entry. Market rolled over adaptive moving average. Had this short trade, rolled over to the long side. Could have been profitable had it continued, but then it rolled over again. So we're experiencing a market that continues to have more and more reversals. So as the more we anticipate the reversals, the more it reverses, and it seems to be one step ahead of us right now. 60-minute breakout, rolled over, 60-minute breakout, rolled over. VIX OC was profitable. Tick fader had a long trade that lost. Here is micro NASDAQ. VSD was actually profitable. This is just absurd price action. Sold off. Had a decent trend yesterday afternoon. We reduced some of our losses on the day with this nice downtrend, but just choppy price action. We're long here, gets a short, go long again, and then it rolls over. And this is the day session open right here. You can see how divergent and choppy that is. It makes this high, pulls back, makes another high, pulls down here, makes another high, rolls over. We finally get short, we're profitable, then it rolls over. We get long, we're profitable, then it rolls over again. So just one step ahead of us today. And, like I said, we're considering pausing down to 0 contracts, trading this after my weekend research. You hate to just stop and the market just all of a sudden become more orderly and more tradable, or your systems do well after losing streaks. You go through a losing streak and you go through a winning streak, go through losing. You don't want to stop at an exact turning point, but this market just is acting very, very different all year long. We've not seen a complete trend, a day trade trend the entire day all year long, and so whatever trade we get in, it just seems to turn against us. You see VSD is long. It's about to get out here in about 10 minutes, but see, we reversed to the long side. Now it's rolling over while we were short on the EVP, but now it's out on EVP. So PR breakout up on the day, 60-minute breakout in Q. Gap continuation, researched the $2,000 stop loss version on this. And so had a nice short trade going, reversed all the way back, and then it came back down. And a $2,000 stop loss would have worked better on this today. So that's one of the reasons why we're trading micros, because you potentially have to use $2,000 stop losses just to stay in a trade. And once again, the dip buyers, they chop it up, they illegitimize it, and then the market rolls over on them. And so anxious for that pattern to end at some point. Maybe we sit out until it does. Maybe we sit out until the dip buyers get crushed or give up, or the bear market becomes more apparent. October 2022 down on the day. QS3 stopped out on the day as well. That's an $700 stop loss. It just looks like a little scalp trade with all the back and forth. You see how far down it comes. It's up here at 14,221. Comes down here about $2,400, I believe. 14,221. More than 2,400, about 14,085, about $2,700 pullback from that high. Comes all the way down here, and then it comes all the way and takes out that high. So it's taken out, pulls out, takes out that high, pulls down $2,700, takes out that high, and you see same thing down here. It's really choppy. It keeps trying to take out those highs, and then it reverses. Then it reverses again, but not until it takes out that high. So when it comes up here, 250 points off the low, it pulls back about 100 points, but then it comes back and takes out that high, and then reverses again. This move takes out that high. This is just the most, stop running type reversal market I've ever seen in the history of, maybe the stock index futures as far as point values are concerned. And so those are the trades on the day. I'll do my weekend research. I'll let you know where we are on the drawdown curve. I'll post a video. Once again, we've scaled back. We've traded pretty small after we've gone through initial drawdown in January with the commodity markets, and now the stock index markets are completely off the charts in their volatility. So we'll go over the drawdown and see where we are, and potentially trade zero contracts until we can find some resolution and a better way to trade this type of market. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.